Using cryptocurrency is similar to using checks or paper money to make purchases or to swap items for profit. The term, cryptocurrency, has been used to describe everything from the currency of the future to a very risky investment. Cryptocurrencies are a complex and distinctive technology that is also accessible, so ideas and methods around them circulate quickly. People could doubt if they should invest in cryptocurrencies, if they are secure, or even how they operate as a result of this. In today's video we will talk about what cryptocurrencies are, how to buy them, and why it is important for people to do their research. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. What is cryptocurrency? Digital currency used on the internet called cryptocurrency is decentralized. A decentralized system of governance and control, as opposed to a centralized financial system, is the norm for cryptocurrencies. Blockchain, a distributed ledger technology, powers cryptocurrency. The first cryptocurrency, Bitcoin, gained popularity starting in 2008. Other cryptocurrencies that exist now are Ethereum, Tether, Solana, and Cardano. How many cryptocurrencies are there and what are they worth? There are currently more than 16,000 cryptocurrencies, according to CoinMarketCap. Their worth varies. As the biggest cryptocurrency, Bitcoin has a market valuation of approximately $900 billion. Ethereum, the second largest cryptocurrency, with a market valuation of less than $500 billion. Since there is no official data source for cryptocurrencies, unlike the public equity markets, it is difficult to estimate the size of the overall market. Some estimates calculate the total market value of cryptocurrencies at $3 trillion. Each cryptocurrency may have many technical features in addition to making value transfers easier. Why are cryptocurrencies so popular? With the use of cryptocurrencies, parties can transfer money over the internet without the need for a central counterparty like a bank. Additionally, 24 hours a day, 7 days a week, cryptocurrency enables rapid international value transfers. Some contend that because cryptocurrencies provide a level of anonymity, security, and immutability that conventional money does not, they are a better way to transfer value. Are cryptocurrencies a good investment? Cryptocurrencies can be conceptualized in a variety of ways. For instance, some believe that Bitcoin, in particular, has characteristics similar to those of money. Generally speaking, something is regarded to be money if it possesses the following three characteristics. It serves as a store of value, a medium of trade, and a unit of account in that order. However, Bitcoin can also be viewed as a type of investment asset, much like a stock. Similar to equities, cryptocurrencies may have a high degree of return potential but also carry the risk of severe price volatility, as well as potential losses. For these reasons, the profile of the specific investor may determine whether Bitcoin is a good investment. For instance, a retiree looking to supplement their income with a steady stream would not find extremely volatile cryptocurrencies suitable for their holdings. However, a younger investor who can handle high levels of volatility can view cryptocurrencies as a crucial or diversifying element of their portfolio. The crypto market. Incredibly, the market for cryptocurrencies was valued $1.7 trillion as of May 2021. At the time of writing, there are over 10,000 cryptocurrencies listed, and this figure is only going to rise. With a market capitalization of around $650 billion, Bitcoin owns the largest share of this, followed by Ethereum and Tether. Since several years ago, cryptocurrencies are becoming more widely accepted. For instance, the first day Overstock.com began accepting Bitcoins in 2014. The company sold $124,000 worth of the cryptocurrency. More intriguingly, businesses are also seeing the investing potential of this digital asset. In 2020, US-based MicroStrategy Inc. spent over $1 billion on Bitcoin. How do I buy cryptocurrency? You can buy cryptocurrency through an exchange or broker like Coinbase. The person needs to open an account, deposit money, and place a trade order in order to buy cryptocurrency. If someone wants to get exposure to cryptocurrencies, they can also buy an ETF, exchange-traded fund, a mutual fund that specializes in them, or the stock of a business that does, like Square. Bitcoin, the game changer. When the globe realized there were issues with the current banking institutions following the 2008 crisis, Bitcoin was born as a gold rush of potential. It was the first cryptocurrency created using blockchain technology, and it may have altered how people viewed money. Forbes selected Bitcoin as the top investment in 2013. Today, everyone is familiar with it. According to Deloitte, in late 2020, more than 2,300 US companies embraced Bitcoin as a form of payment, making it a desirable asset for the average person to own. Why invest in Bitcoin? Bitcoin is peer-to-peer, which means it doesn't use an intermediate and has a low transaction cost. It is also very secure in nature. It is quick and completely transparent. For example, each Bitcoin transaction you perform is recorded on a public ledger that is open to everyone. It cannot be fabricated or imitated. Because blockchain transactions are also irreversible, the likelihood of fraud is significantly lower and your investments are much safer. Through exchanges like WazirX, a safe and secure platform for investors, you may trade Bitcoin. Are cryptocurrencies legal? The laws governing cryptocurrencies are still being developed. Whether specific cryptocurrencies fall under the legal definition of security, and are thus subject to the disclosure and registration requirements of the Securities Act of 1933 and the Securities Exchange Act of 1934 is a topic of great interest. The regulation of cryptocurrency exchanges and stablecoins, are cryptocurrencies tied to a stable asset like the US dollar or gold, is another area where governments are concentrating their attention. Regulation of decentralized autonomous organizations, tax treatment, and anti-money laundering requirements are some of the other growing legal problems relating to cryptocurrencies and blockchain. Why are cryptocurrencies so volatile? Due to the industry's youth, there is a lot of volatility in the cryptocurrency field. Investors want to play with their capital in order to make quick money and learn how cryptocurrency values fluctuate and whether they are affected by them. Cryptocurrency prices depend on how many people use them and for what purposes. If more individuals utilize them to make purchases as opposed to merely keeping them, the price will increase. The scarcity of cryptocurrencies also influences their value. This speaks to the limited mechanism of the cryptocurrency. The maximum number of bitcoins that can be mined is 21 million, according to the Bitcoin protocol. Bitcoin's price will consequently rise as its scarcity inevitably rises as more people enter the cryptocurrency space. By obliterating a percentage of the supply, some coins also use the burning mechanism to raise their value. A cryptocurrency's price may fall if large accounts start selling their holdings. Because of their substantial positions and potential to move the market if a group of people decides to sell crypto assets, these accounts are referred to as whales. How do I protect myself? If you have specific questions, speak with your own financial advisors. In general, people should adhere to the fundamentals of wise investing, carefully read information, and steer clear of investments that promise absurd returns. This is it for today's video. What do you think of our video? Tell us in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.